We're beginning this week with a lot of volatility. Tariffs, tariffs, tariffs. But the numbers coming out were before all the tariffs and volatility started. Let's take a look at what we expect to see in the numbers this week. Before we begin, remember to like this video and subscribe for more economic updates. The most significant economic data release this week arrives on Friday with the government's January non-farm payrolls report. Economists expect the Labor Department to report 165,000 new jobs last month, a sharp drop from December's 256,000. The unemployment rate is projected to hold steady at 4.1% for the 8th straight month. Beyond the main jobs report, 2 additional labor market updates will offer more insight. On Tuesday, the Labor Department releases the December JOLTS report expected to show 8.02 million job openings, down nearly 100,000 from November. Job openings remain more than 30% below their March 2022 peak of 12 million. On Wednesday, ADP will release its National Employment Report forecasting 150,000 new private sector jobs in January, an increase of 28,000 from December. With inflation still stubborn, some analysts believe a weaker job market could push the Federal Reserve toward rate cuts. Citi's Stuart Kaiser emphasizes the importance of unemployment data. We think the unemployment rate is probably the single most important macro data point you're going to get every month. If you see a significant uptick in unemployment rate, that potentially puts the Fed under pressure and puts the market under pressure as well. This week, the Institute for Supply Management, ISM, will provide updates on the health of the manufacturing and services sectors. On Monday, ISM is expected to report a January manufacturing PMI of 49.6, slightly above December's reading but still in contraction territory. Then on Wednesday, ISM will release its services PMI for January, with estimates placing it at 54.2, just above December's reading. Unlike manufacturing, the services sector has mostly remained in expansion, contracting only 3 times in the past 4.5 years. This week also brings an update on consumer sentiment. On Friday, the University of Michigan will release its preliminary February Consumer Sentiment Index, expected to rise slightly to 71.5 from January's 71.1. This reading is before the tariffs began. While the index is 40% higher than its all-time low 2.5 years ago, it remains well below its long-term average of 85, a level not seen in over 3 years. A key focus will be inflation expectations. Last month, consumers projected one-year inflation at 3.3%, the highest in 7 months, with a 5-year outlook of 3.2%. These numbers reflect feelings before tariffs were introduced. That's it for now. Remember, numbers are a picture in time, and that picture is changing quickly with all the tariffs. So make sure to stay with us as we keep you updated to what's happening. This is Devlin Steele for Augusta Precious Metals signing out.